We're off the lows in the US, marginally off the lows in Europe. Is there further to come in this decline we've seen in the equity space, or are we nearing the end of the 5-6 day sell-off?
Mark, thanks for having me on. Well, the sell-off that we've seen last week was a natural, but more important, a rational response to an increase in real rates. Real rates tell you everything about how assets should be priced, how risk premium levels should be set, because real rates represent the cost of capital for companies. If real rates increase, it makes it increasingly more difficult for companies to generate excess profits. So the key question here is, what is the trajectory of real rates going forward? And more importantly, what is the speed of that trajectory? We pay a lot of special attention to how the derivatives markets, in particular the option markets, are pricing downside risk as well as upside risk for various asset classes. And currently, based on the level of risk implied by options when it comes to the downside for equities, they're still quite moderate. Surely they've increased over the last week, but they've increased from very, very low levels to more normal levels. So this is all part of the normalization. So to answer your question, we don't believe we're anywhere near a point where you could see a sustained pullback in equities.
That's a big call. So as many are saying, Ash, this is a healthy correction. Are you not concerned it might turn into an unhealthy correction?
Right now, no. Once again, real rates are going to be that variable which will dictate how painful the correction is. And real rates are governed and dictated by central bank activity. So if central banks begin to raise rates, drain liquidity very quickly, you can see a sharp increase in the real rate, and that's when the economy can become quite fragile, and the vote is still out on whether the economy can handle higher real rates. Real rates still right now are quite low. In the US, they're sitting at about 70 basis points. In Europe, they're sitting close to minus 100 basis points, which is why financial conditions, even though rates have backed up since the summer of 2016, remain very, very accommodative.